Hopefully you're having a great day today. In this video, guess what we're doing? We are going over the top AI, nuclear, quantum stocks to watch right now with some cautionary targets, and we'll get into it. Also, just a friendly reminder, we got the appliances coming in tomorrow, actually. So the kitchen will start getting filled up with those appliances. And thanks for your patience on the background as we've continued to remodel this place. Excited to get it done so we can move on to the next whatever we do in real estate here. But yeah, absolutely interesting to watch the markets today because one of the biggest things we saw was this big spike at market open. A lot of the markets saw that. You could see it over in BBAI, for example, before it kind of corrected back down to that 735. Then you see also semiconductors. We talked about SOXS presenting an opportunity this morning at market open. Whoa, that's really zoomed in. And this morning at market open, SOXS, this was what we actually looked at this morning. Look, we actually put a drawing. I said maybe from the $7 range up into this V-shaped pattern, about a 738, it's 3% margin. I said it's not quite enough margin for us today. So we ended up trading. We didn't actually trade anything this morning. We just let the market do what it did. Did we trade anything? No, we didn't. We didn't trade anything. We just let our positions kind of hold. But yeah, it ended up making that 6% move. What is that exactly? It was SOXS, which goes up when the semiconductor market goes down. So a little bit of a market correction there. And we're going to jump into some nuclear as well. I got some really interesting feedback on some stocks. And I'm looking at the chat here. We got Nazir here. He wants to get some thoughts on APLD, which we can take a look at. When it comes to data centers, APLD is definitely in the conversation. Recent big multi-billion-dollar deal with CoreWeave. You got Mia sent a message. Niner Gang there says first live chat. Welcome in. Neil says, hey friend, what's going on, Neil? Happy to have you here. Gritty says, poor BBAI. Jzev, what's up, Will? What's up, man? Johnny Daniels, Stockmate crew, let's go, Johnny. Yeah, I see some Stockmates there. Chris Turbo, BBAI. We'll take a look. So I'm going to start off with Oklo, and then I'm going to jump right into APLD. Sam Altman, for example, is the founder of OpenAI, and they work with Microsoft, and he also is heavily in now the data space, the data center space. And I don't know if it's coincidence, right? Because APLD, you got the data centers, that's a conversation. But outside of the data centers, what just recently happened is Sam Altman decided to back this company, Oklo. It's a nuclear company. I think last we covered it, we were actually a little more on the bearish side. We said it's up at this resistance. Maybe we see it sell down to these levels around $35, $36. It has sold off. It then pushed back up and got rejected. So Sam Altman, basically, if I kind of search this company, I think it's Oklo. He's the chairman at Oklo. It's a nuclear energy startup. One of the main focuses with energy, and I see the comment there, hey, what's up, Minoke? Happy to have you here in the live sessions. And we'll take a look there, Jzev on BB, don't worry about it. Kate, what's up? Hey, Kate, happy to have you here. Cool. Okay, so yeah, again, Oklo is developing advanced nuclear reactors specifically for the Aurora Powerhouse microreactor, and they aim to deploy them globally. The company went public in May 2024, and part of the reason, I don't know if this is still happening. Let's see here. Oklo announces chairman transition. And they announced that Sam Altman will step down as chairman of the board. So maybe that's not as much news. Sam Altman may be no longer part of the board there. But you wonder, why was he involved in the first place? What was the focus? Let's take a look at it. They're building these, or working to build, not even building yet. As you can see, they're 3D models. So like there's a lot of risk. It's still kind of pre-revenue. To build these nuclear reactors that have clean energy for data centers. And specifically, that seems to be their market. And when we look at the Oklo stock financials, we'll jump in really quick to what it looks like. $8 billion market cap, so they're up there. When we looked at their quarterlies, net income negative, around 20 million a quarter negative. And then balance sheet, though, you see they raised a lot of cash and they're holding more cash, around $300 million there in cash. So liabilities low, assets high. They got some runway. They're still overvalued for sure. I mean, that's kind of what we were looking at here. $8 billion market cap with no revenue. But we're looking for, maybe that sell down or maybe more opportunities. I just put it here because I like to see nuclear energy focusing on serving data centers because it will be potentially a lot more efficient. So that's why we have it there. But yeah, financials good, chart overextended. Excuse me. Unless we see a hyper bull trend in the chart, but I think that's super unlikely. I would have a cautionary target and more likely see a sell down, but it's possible that you get that bull trend up there to that 40%, but it's probably nothing more than institutions driving price up before selling out. So, I mean, I could be wrong, but that's how I would approach it. I would be very more conservative. I would expect sell downs there in the near term. So next one we got here was APLD. So now Zir said APLD, and I see John says, sorry, I'm late. No worries, John. We just started it. You could always go back in the replay. Hey, Will, family, SRFM, Palantir, bought some shares. All right. What's going on? What's going on? Happy to have you here. Chris says, is Wolfspeed going to be bullish again? I've never been bullish on Wolfspeed ever. In fact, I think Wolfspeed, I mean, we didn't call that they would go bankrupt, but we definitely called that their liabilities were higher than their assets and that we wouldn't touch it and that it was getting manipulated. But I don't know. I couldn't tell you. But I'll tell you that's probably not the right question to ask. The question that might serve you better is why, not what. Like, is it a should I buy it versus what's going on with it? Why is it doing what it's doing? Hopefully that's helpful. So AI and LLM, we go over to data centers and then we go over to APLD. APLD has been a focus recently. We ended up selling APLD yesterday for a profit at market open, and it was because it was just going sideways. That's basically what happened in StockMates. We said, hey, it's just going sideways. We're just going to sell it. So we sold it yesterday, market open. So it was right around here. Right around here, we sold it. I said, I don't like the direction. It sold back down. I like that it did sell back down after that, and now we maybe see this recovery. So APLD is building data centers, and I see that Johnny on KTOS will take a look there. Steven says, cool, I show up, you do APLD, let's go. Yeah, so let me know your ideas on APLD. It does help to hear what you have for ideas there. When it comes to APLD stock, couple things to consider, and we'll actually jump right into their website first. Epicenter of AI built here. They're focusing on building data centers. They got some multi-billion-dollar contracts. They're going point of generation, so solar, wind, air, all that stuff. They're focused on essentially building out data centers for tech. You could see AI factories, a case study for total cost of ownership. They're also working with not just big tech like Supermicro, NVIDIA, Dell, Intel, Hewlett Packard, or what have you. They're also working with some Bitcoin mining companies as well, which is kind of interesting, which makes sense. But yeah, so we see them build some momentum with that recent, if we go to investors relations, it was this $2.7 billion data center savings, and then also some other announcements. But this one here, I think it's with CoreWeave, if I'm not mistaken, which potentially could be big for them. or Polaris. Yeah, so basically they're signing some contracts. They're building some data centers. This is the CoreWeave contract, estimated at approximately $7 billion in revenue. Um, it's in anticipation of generation of that revenue. So we'll see if that shows up on the balance sheet. If it does not, then we get into the stock. $2 billion market cap, fairly small for a data center company, but their revenues are holding around $50 to $60 million a quarter, recently having negative net income, with their liabilities not in dangerously close levels, but definitely some high liabilities, meaning the blue is their cash. They got a good amount of cash. The total liabilities is 1.2 billion, which is still up there. So maybe not the most favorable financials at all. And that's why I'm saying if they don't show up with this, what do you guys think? I mean, if they don't show up with a positive income in their next earnings, they might not see, this big move that we're looking for up into these levels. I mean, they are selling down. There's this overall uptrend. If they don't come up with favorable earnings, we could see them sell it as low as, who said it? APLD might go to 7. Ben says, I think it's possible. Like if they don't build out good financials, then it's just kind of talk. So that's one thing to say for APLD. And I'm saying things like, when I say, and that's one thing to say, it's just like filler words. I don't know why I'm saying that. Anyway, $7 a share, possible, but more than likely they do have good financials, and data centers continue to be one of their advantages in that market, and that we see that potential swing. It's about a 10% swing up to $10. And then you got, if it does hold this level around 950 here, this previous support here, that's a 10% swing to previous levels we saw recently. That would take some more catalyst most likely, but that would be a $13 range for APLD. So financials, they look okay. News looks good. Chart looks okay. A little on the overextended side, but then did make a correction down. And right now, it's at this previous resistance level here around $9, and it's also got a support there. If it breaks below 9 and they don't have any big catalysts, then I think that call out from Ben at $7, I think that would make a lot of sense. It's a good idea to be prepared for that, especially if market conditions shift. If we start to see tariffs really become something investors look at, I don't know if that's going to be the thing. It might be missile changes. It might be that interest rates get lowered and people are bullish on stocks, but what happens is maybe that means more people are like, oh great, interest rates are lower, I could sell my house now because I could afford to sell it and still go get another house and not have a super high interest rate. So like, so now I'm going to sell my house. We already know the supply of houses is going up. What if there's too much supply of houses? So then there's a lot of supply of houses. What happens? No one could sell their house. Then that's in a position where people are like, what do I do? How do I get money? I got to sell my house. And the market actually has negative sentiment around something like that. So that's a danger of interest rates going down. Like, yes, it could be good for stocks, but it could also have a kind of reverse effect on the real estate market. So something to consider. What's that? I'm making dinner for us. Sweet. Sounds good. Cool. And Tammy says, she's like, we're getting dinner soon. She's making dinner. And I was like, cool. Because we are going to be making dinner probably when we get the new stove here tomorrow. Who knows? That'd be cool. All right. So yeah, that's the deal with APLD. Overall market sentiment and where they're going. Great market, data centers, but they do have some potential turbulence, especially with this down sell that they've seen recently. So we'll watch closely. Next one on the list here was BBAI. Chris, I did a full breakdown on BBAI this morning. Let me see if it's done anything differently since we made the video. And then if not, then I'll drop the link for you. Sound good? Let me know, Chris. BBAI, all right, we see it correct down. It's down to 735. All right. So BBAI, we've been covering it a while. It was at around $1 a share. We got this push up to $10 a share from November all the way until February is when it peaked out at $10. Started to sell back down basically with the rest of the market, and we saw it find some support at $2. And Ben says, "Could you take a look at financials on CRNT?" I'd love to. I actually really like their financials. And then we started to see this recovery on Big Bear enter that hyper bull trend. And basically, they shot up in a very consistent uptrend all the way to $8.70. And what we saw recently is they sold down. Hey, it looks like they did what we said they were going to do earlier today. So I guess I'll just fill in really quick. We made a video earlier today. Kind of the outlook on the day was that when we're looking at Big Bear, they have this previous resistance at $7. They sold down to that previous resistance, and I said, hey, it's breaking pattern as far as going from left to right. So that overall tight bullish trend is breaking a little bit. You see them consolidate from left to right now. And I said, if they're going to find a support, it's going to be at $7 and potentially bounce back up into that $8 range. It's about a 13% margin for profit. It looks like it did make that recovery throughout the day and bounced up about 3.6%. Maybe not the full, 12% we were looking at, but we did see it validate that previous resistance as a support, as we oftentimes look for. So it's possible Big Bear could continue some of that momentum. I guess that's the next target up is $8 for resistance, and support right now is that, again, right around that $7 range. So, I mean, as far as things changing with Big Bear, not a lot. We saw some institutional selling kick in. I don't know who it was, but you definitely got some big players holding millions of shares. BlackRock, Vanguard, AE Industrials. You got VeriScan kicking in this technology here. We know number one indicators we look at are the market growth, and then we look at the actual market usage. So it's one thing to say they're making money. It's another thing to say, and we can see it firsthand. Michael says insiders are shorting BBAI. Let me know, man. Where are you finding that? Drop a link, something like that, because you could say that. I like the opinion, but would like to hear where that's coming from. And when it comes to their recent contracts, they look good. We just don't know the value on the recent deployment of their passenger processing biometric, those facial scanners, the VeriScan, because they got out into JFK, Denver International Airport, Los Angeles, even in Canada. They're pretty international, Montreal, Trudeau. I mean, they're out there, and we could see them go to new levels if that shows up at the financials, and these each have a contract value, because the financials also have had that negative net income recently, but the revenue was increasing quarter over quarter. So it's like, are they going to shape it together? They got their liabilities down, so they got more cash now. Are they going to continue that in the next quarter, and those contracts start to roll in from what we see, along with their already big library of contracts they have with other defense tech? It would make a lot of sense. So that's kind of what we're watching there. That's the full breakdown. Is that sufficient? Is that sufficient for you? I think it was Steven. Who was it? Can you do BBAI? Yes, man, of course. I'm happy to take a look. So Veronica says, hey, Will, thanks for advice. If you get a chance, would you take a look at INBZ? For sure, for sure. Daniel says, and I'll take a look there. Before we jump into that one, Jay Zev says BB. So let me take a look and let's jump in, man. BB stock for Jay Zev. Market cap 2 billion. Financials revenue is pretty positive with not much negative net income, but not really increasing year over year, just kind of consolidating. Balance sheet declining, total assets shrinking with liabilities staying the same. Financials look okay. So what is this company? BlackBerry? I don't know, man. Ooh, you're gonna have to tell me something because I don't know, man. Is it their cybersecurity? Because I know they were working on some cybersecurity stuff, or what is it that you're watching with BlackBerry? Because BlackBerry's kind of just been declining since like 2008. Am I wrong? I might be wrong. Yeah, they've had some runs. They've had some runs. Let's see. They have been declining since 2008. That's actually funny that I said that because like literally 2008, ever since 2008. It's not that it was necessarily like the 2008 crash. It was actually the iPhone. I was just watching how Steve Jobs introduced the iPhone recently and how he was like, "You see all these buttons? You can't change them." And so the touchscreen was born. Yeah, and they've had manipulation on their stock big time. You see this? So I personally, I wouldn't touch it, man. But thank you, Jzev. I appreciate the outlook there, man. All right, you got one for BTQQF. I don't have it on a ticker symbol here in Robinhood, so can't really give you full analysis there. But I do appreciate it. And it's not that I don't. I mean, if you have a specific reason why you're watching BlackBerry that's like very legitimately a value that they've increased in the marketplace, by all means, let me know. Let me know. For sure. All right. So when it comes to BB, that's kind of the breakdown. Declining since 2008. Um, see, it's Philemon says, can you take a look at SRFM? Let's take a look. SRFM. Surf Air Mobility. Let's take a look here. SRFM. Okay, so revenues declining quarter over quarter, but increasing year over year. Net income holding a little negative. Not bad. Oh. So on the left, you have the cash and like total assets in the blue. And then on the right, in the orange, you have the total liabilities, like the money they owe, their debts, and things like that. Do you see how their liabilities are like very, very, very much greater than the amount of money they have? So that's kind of an indication that they could go bankrupt. It means they don't, it means they're operating at a deficit too, which they are. So SRFM, this is actually a good study time. What's it called? Surf Air Mobility. So they have some 3D designs. Surf Air, scheduled flights. Public use airports, building a regional air mobility ecosystem. Electric aviation software and air travel company, expanding the category of regional air travel and reinventing flying through the power of electrification. Okay. Cool. Yeah, financials just aren't there, so I wouldn't touch it. I actually really like the site, and oftentimes it's the ones that have the most beautiful sites that are very like futuristic and nice and really cool that make you want to believe. Yeah, I wouldn't touch it, man. Sorry about that. Also, look at how many times it's declined since IPO and how much it's been manipulated. Do you see these like crazy volume spikes and sell-offs? That's pump and dump. Pump and dump, bro. You don't want it. Don't touch it. Look for value, my man. Okay, so let's see here. So Kate says hello. All right, I'm below that now. APLD, we're below that. APLD, Chuck. Veronica says INVZ. That's what it was. Veronica says INVZ. Let's take a look. Innoviz Technologies. Oh, it looks like a pump and dump. INVZ. Did somebody tell you that if you don't buy this, you're gonna go broke, or this is the next 1000x? Maybe I don't mean this to be like I'm kind of making a joke actually. But yeah, so negative revenues or negative they have revenues but negative income. Um Revenues slightly increasing year over year, which is okay, but the net income definitely declining or like increasingly negative. Their total cash has been decreasing year over year since 2021. You could see their total assets shrinking, with their liabilities actually even going up and slightly decreasing last year. So they're not really holding it too well. Quarterly, they looked a little bit healthier though on their balance sheet, and they kind of like it looks okay, but on the annual basis, you do see that big decline. I don't know exactly what it is they focus on with their product, but um, I think that it's possible they're serving, you know, they are serving, and that there could be some potential for them to bring value. They're obviously, I imagine they're bringing value to the marketplace one way or another, but um, Innoviz, Innoviz Technology, they're LiDAR for autonomous vehicles. I love the market. It's actually a really great market. So don't get me wrong, that's a really nice market to be in, but the financials just don't really add up at all. And they say partners Nvidia. I can get into a partner program with Nvidia. I could probably do it in 1 week. Um, if they said customers, it would be a little bit different. Or if there was more clear innovation, so they had innovation a BMW award, best innovation. But yeah, if there's something specific, Veronica, you got, shoot it over to me. It's possible it could do well, but again, financials just not really adding up, and it's been manipulated and been selling off since IPO. So it's possible it could have a really nice recovery, but again, we just need some more information for sure. Cool. Awesome. Last choice says I got wrecked over nuclear, staying away. Yeah, I mean that's why did I wait, is this video called Cautionary? Did I lead with that? Okay, cool. Because cautionary for nuclear is important. Not that it's not going to be a good long-term potential, but we're talking 5-10 years before things come alive, I would imagine. Let's take a look at CRNT. CRNT, we had this target here for CRNT. Looks like we were in a trend last time, and it did continue back up. It's continuing that move. We were looking for actually a recovery up into that $4 range as it was consolidating from left to right, so finding support and resistance. And that started back really years ago. So this is like all the way through. This is, 2024, and then just recently sold off at the beginning of 2025 down to here with the greater market. And CRNT has this is the problem actually, is they're focusing on 5G, which is good. They got cash. You can see their revenue 100 million a quarter. Very good. Net income mostly positive with occasional negatives, but usually positive. Their balance sheet looks okay, kind of increasing total assets annually, looks good. Financials look good. The thing about their company is that they could have major competition with Starlink, major competition with not just Starlink, but like companies like ASTS, like this company ASTS. Do you see how ASTS is doing 5G, but they're approaching it from like launching satellites up into space that deploy like this and shoot down like this? You got to ask yourself. I mean, it's not that they can't continue to, their financials look good, and to see them make that 80% move, it's quite possible. It is possible for Ceragon Networks, CRNT. But you do have to look at kind of how fast things are changing, and there is some potential there with AST, for example. to take some market share. It's very interesting. Like when you look at the 5G and how they're kind of doing it, it's slightly interesting too on the frequency side. It's amazing technology, super innovative, but I'm also wondering, what the implications would be of having some disk like this up in space that's basically, projecting 5G frequency down on us. I'm curious. Makes you think a little bit, right? Like to do a little more research there. So, okay, Shaz says, I got skipped. SoFi. He says SoFi. Oh, did you notice that I skipped SoFi? I didn't mean to at all, though. I promise you. So, SoFi is in finance, and they are competitors with Robinhood. However, let me check something on SoFi. Have they added crypto? Because last I checked, they didn't have any crypto. They got personal banking, investing. Let's check their investing. Confirm you're human. Invest in stocks, ETFs, IPOs, start automated investing, save for retirement, fractional shares, all in one app. They don't mention anything of crypto. I think they're missing a massive market by not touching crypto. Their 10-year fixed, or what are these CDs or mortgage rates? They're competitive. They don't do anything, in my opinion, that's that much different than, Mint Mobile or Robinhood or, most banking apps. They do go more tech focused, but there's nothing that's blue ocean strategy. When they say like a company that enters a red ocean as competitive as, let's say, finance, there has to be a unique selling point or proposition that makes them gives them an experience unlike others, and I think they don't really have that. I know a lot of people hype them up. There's a lot of conversation around them. And let's actually just jump at the financials real quick and I've never done a full breakdown. I've done one breakdown. $22 billion market cap. Hold on, let's back up here. There's a lot of hype for sure. PE ratio is at 48, which is pretty high. They have all these targets, especially Yahoo Finance, where it's like the future is very uncertain, but 8 out of 21 analysts say it's a buy. Projected earnings growth of 43% annually. High loan defaults is what they're dealing with. If they have competitive rates, maybe they're trying to give out more mortgages that comes in the form of competitive rates, but maybe they're not fully going in and qualifying people or something, and it's not paying off well for them. Okay, PE ratio is high. When you look at not the news so much, but the quarterly incomes around 700 million a quarter, increasing quarter over quarter. Financials look fine. They look quite good, actually. They look good. Actually, though, the balance sheet doesn't look that good. For a finance company offering software, they got 5,000 employees. Okay, I know they have like SoFi Arena and SoFi this, SoFi that. But they got 5,000 employees. And honestly, their liabilities are pretty high. Their liabilities have gone up more than their assets, which means they are not holding that much cash compared to what the debts are that they own. $22 billion company on paper, apparently in valuation standpoint, but liabilities actually subtracted from the assets, they only got about 6 billion in cash. It's not too bad, but yeah, I mean, that's not the healthiest balance sheet when you see that much orange. So even Rocket Lab might have better ratio of liabilities to assets, and they're building rockets. I mean, how much infrastructure and liabilities do they have? There's software and banking. Interesting. Okay. Anyway, let's take a look at the stock. Looks like last we projected, we were watching it here. We had this kind of support and resistance. It's just like they came out, they IPO'd back 2021. They sold off. They started to spike big up to $20. I think that to look at the trend and stuff, there's not much I have for you. It looks a little overbought at the moment. I would say there's more risk than reward, and a sell down would be more probabilistic than seeing a recovery or continuation up. Um, I don't know what you think about it, but let me know. And that's kind of the full breakdown for SoFi in my eyes, and I could be wrong. But again, that's how I would approach it. I would find it to be overvalued, overhyped, personally. I do see they're providing value to people, though. It's not like they're not a company that's providing real value. They are, and they do real stuff. Like, one of the first questions I ask, though, when people tell me they invest in SoFi, because I talk with investors all day, is I say, do you have the app? And they say no. They say, I use Robinhood. Or they say, oh, I have a Bank of America. Or I have, what's that other one? Renault or something like that. They're like, I have another bank, Revol. So a lot of times people invest in SoFi, but they don't even use SoFi. And I think a really good indicator of like a company of like if you should invest in it is if you actually use it, or so it's a good question. Every time I hear it, I'm like, well, do you have SoFi? Do you use it? And they're like, no, I don't. I'll use Robin. Oh, okay, well, it potentially could make sense to buy, Robinhood stock then. Potentially. So guys, we got some good breakdowns going. I got time for probably about one more. I got it to hit the gym here. We went earlier today, but it was just really quick, and I got to do an ice bath, but like I need to tame my mind some more, exhaust the body. Let's see, ticker symbols. Bernie says SoFi is growing like Jack's Beanstalk. They add new product every month that everyone wants. Falling interest rates will allow SoFi to mint money. I mean, yeah, I mean, if they are growing from, like from a revenue standpoint and from an attention standpoint, but when it comes to their assets and liabilities on their balance sheet, they don't look as hot. That's not really growing. Their liabilities increased more than their assets. But I also like, by all means, if you're in it and you think it could go to $40 or what some of the analysts say, all power to you. I don't have any I have no agenda to change your mind or anything. I'm just, sharing with you the facts of what we see for the company. What site do you check using balance sheet? I love Google Finance for that. It's really good. I'm actually working on adding that into our own app as well, which we'll go over. So I got one more here. Steven says HOVR. I'm going to jump into it. We did some breakdowns on QUBT yesterday there, and I see Clayton says thoughts on MBLY. And there was a stock I was supposed to cover that I didn't cover, that somebody told me, and I didn't cover it, that I wanted to cover. So here's what I'm going to do. I'm going to do one for Clayton and one for, really quick, we're going to jump over to HOVR. So Clayton, what do you got there? MBLY. MBLY. Mobileye Global. Okay, not a whole lot to work with. They kind of IPO'd. They consolidated for many years and then kind of sold down recently, pushed back above the 200-day moving average. Let's take a look at their financials. It's MBLY stock. Before we take a look at any product, $14 billion company recently got invested in by Intel. Secondary offering of common class A common stock. You got annuals looking okay with revenue. Net income went big negative in the last quarter, or at least September, and then kind of declined. Balance sheet looks good. They got a lot of cash and hardly any liabilities. Balance sheet looks good. All right, let's take a look at their product. Mobileye. What is it? What is it called? Mobileye Global. I don't think I spelled it right. Okay, driver assist and autonomous driving. Really good market, excellent market, a lot of revenue happening there. Creating autonomous future takes experience vision. I saw this at CES. It's tremendous. Some cool marketing. Self-driving vehicle. And they can essentially like pop this on a, in this case, a Ford or any car. It's cool. I like their product. They're serving the world. It looks pretty good. They were just chosen by a global automaker. And they don't say who. They just say we were chosen by a global automaker. Volkswagen. They're cooperating. Potential driver assistance. That's good. Lyft. Hey, this is pretty cool. Zeekr, Volkswagen, Verne. I don't know that one. But yeah, so I mean, when we look at their company, yeah, okay, I told you, I seen it at CES. I knew it. So I was there. They were at CES. So some of these partnerships are notable, especially Lyft. There's nothing I have for you from a technical perspective other than this green line, this 200-day moving average, oftentimes acts, this is the simple moving average, it acts as a resistance at 200-day, and it was getting rejected and rejected and rejected and rejected. But when it's bullish, it acts as a support. So we just saw it push up above that 200-day moving average. I would watch that level closely. That's kind of what you got as a level to watch. And then you got this previous resistance level right here. It's a support and a resistance right there at about $17 a share. And it's currently at 18, and their market cap's at 14 billion. They're already up there. So I wouldn't say that they have a ton of, like, they don't have a ton of maybe upside from a financial perspective, given the financials we just looked at, but they could see recoveries, and it looks like the next target would be up in this previous support level that we've seen here at $23. I don't know how fast it would move because they're already kind of up there in market cap, but I guess that's kind of the target. Maybe up into these levels first, about a 15% increase. And then if you see that recovery and it does hold that $17 range here and it does start to turn bullish and we see it continue its direction, then yeah, that $23 price point, about a 37% increase could make sense. Notable partnerships, financials look good. Nice call out there, Clayton. I think when it comes to the first person market is why I wouldn't buy them. I would just want to see that they're already out in the market. I like to verify that. And there was one more we were going to take a look at, which is HOVR. And that's going to be the last one for today, guys. HOVR, is it worth it? Let's take a look. Oh, net income, super volatile, no revenues, balance sheet, volatile, super high liabilities. Oh my gosh, financials don't look good though. HOVR, I mean, we could look at the individual revenues. There weren't any generated as of now. They just IPO'd in 2024. They've been getting pumped and dumped. As of now, I mean, we could take a look at the product one time, but I'm pretty sure you might want to approach this one with some caution. There's a lot of stocks that, come out and very exciting, but until they see real world usage, they could be very, 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 very risky. Yeah, so some 3D generated. This is fake photo, or it's not a photo. This is like 3D generated. They have maps. Maybe they got like one prototype. That's a pretty small one. That's really, really small. I don't know that that would even fit a human in it. Company, defense. Are they working with defense or something? Maybe. Maybe they're working with defense. Last is to check the investors. News, press releases. There's a designer they partnered with. Partner. Any contracts? Rolls-Royce. 2025. Not any contracts. No contracts yet. First articles in 2025, they had exercise warrants, 2.7 million. No other contracts. Letter of intent with Discovery Air Chile, which is a letter of intent, not necessarily an action that happened. And then there was no further articles after the fact. A lot of red flags. I wouldn't touch it. I would have liked to end the analysis there a little green, but nevertheless, I really do appreciate it. Thanks for bringing all the ideas, guys. Steven, thanks for dropping it. Nancy, Tristan, thanks for being here. Bernie, Tristan says, "Ooh, hey man, we gotta just approach it and see what we find." Nancy says, "CEO is from Air Force." I totally get it. They're going to be granted by big contracts, governments. It's possible. It's all possible. Rigetti has got the best scientists in quantum space. Oh, I do think that is probably true. They're right there in Berkeley, California, for sure. And as far as the CEO being from Air Force, with all respect, it doesn't necessarily qualify the company to be a good buy. Naglium says, "I'm buying it because I'm a risk taker and I'm an idiot." Don't say that, man. If you do it, say, "I'm buying it because I'm confidently investing in it and I got a plan for it." All right, guys. Thanks so much for tuning in. Appreciate you all. Johnny, Tanette, thanks for tuning in. Matt, Tristan, you got Dylan. Dylan, I see that sale. We'll take a look at some point, man. Really do appreciate you all. And you got Beakwetter. Thanks so much, man, for tuning in. Sylvester, I see you there. And we'll definitely get to those. To Gritty. What's up, man? Awesome. Well, hey, thanks for tuning in, guys. I appreciate you all. We got to go over a few. Didn't touch quantum, so we'll touch them tomorrow. And then when it comes to our market live session, if you want to join us there, it's the second link in the description. I'll be there tomorrow morning, 6:30 a.m. Pacific time. It's early in the morning for me because I'm on California. But there's been some good conversations here inside of Stockmate. If you guys ever want to, surround yourself with other investors, I was just kind of looking through here. There's some good partnerships. It's just today we're starting to see it heat up. There's also some really nice testimonials here for Stockmate. One of the ones I saw recently was David. He made 100% returns in 4 months. David, let's go. Grew his account from 14K to 28K. Lawrence had some really good things to say in the last few days, and I just got off the phone with one of our new Stockmates today. I call you if you join Stockmate. It might be kind of weird if it comes from a weird number, but California number, but it's me. And we also got earnings there if you want to get earnings targets for all the stocks, as well as which companies are reporting earnings, and even get a free t-shirt sent to you anywhere in the world. I would love to shoot it on over to you. Thanks so much for watching, guys. If I earned your thumbs up, smash the like button. And do consider subscribing if you're getting value out of the analysis and the videos. And I'll see you guys in the next video. Take care, guys.